The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the April 3rd wonderful Wednesday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life, because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool. I'll bet you this tool might even apply to some of you out there. This is the tool that I call, give me a second here, I call this tool, sorry about that, I call reverse the word evil and you will have the word live. Now, folks, the answer is yes. Bad things can happen to good people. In fact, I can picture exactly where I was sitting when one of my attorneys, he turned to me and he said, you know, Steve, good things or bad things are not supposed to happen to good people. And the story goes back many, many years ago. In fact, many years ago, I got involved with a contract. In fact, contract was reviewed by attorneys. It was all written. It was all very clear. You know, if I did X, I received X. I don't know if you've ever put down something in writing, signed a contract, only to have somebody not live up to their end. In this case here, I went ahead and took a guy's business and grew it, I don't know, maybe it was about eightfold in about 4 or 5 years of time. Now, in order to do that, I had to commit myself. I had to give all the passion in order to be able to grow that business. And as a result of that, folks, I was supposed to receive certain things that totaled a lot of money. And that led to a lawsuit out there. What I learned was that a bad settlement was better than a good lawsuit. At least that was all the advice that I was getting from different attorneys out there. But it was a situation where something bad happened to, in my case here, good. There was no reason to not have received what it was that I was supposed to. So I don't know if you've ever gotten involved with somebody, whether it was an oral agreement, a written agreement, or what have you. In fact, I found that even though we had something that was written, that the way that the legal system worked, the case law that was out there, is I could actually get what it is that I deserved, what it was that was written down on a piece of paper. It might take 10 years. And then the question would be, would that individual still even be around? Would that business still be there? That's where that phrase, a bad settlement was better than a good lawsuit out there. Now, of course, it would only be fair that bad things only happen to bad people, but that's not the way that life works. Instead, in the fullness of time, the pain and the personal catastrophe that some of us experience, often what that will do is that will lead to an understanding and an inner growth out there. And if I had not gone through that bad experience, I'm certain of this, I wouldn't be here today. I would not have ended up doing what it is that I do. Now, maybe that doesn't impact you, but it impacts me because I'm doing what I love to do. I've always loved doing the things that I do. It's why I put so much passion in it. And, you know, everything happens for a reason. Oftentimes we don't know what that reason is. That's why we've got to go ahead and play out that deck, play out that hand that is dealt to us, because there's always something on the other side. Now, we can't control the circumstances in life, only how we react to them. And when it seems as if you've been dealt an evil card, just remember to reverse that thought and reverse the word evil, because it actually spells the word live out there. Because something that is evil can actually transcend a good person and propel them into an even better situation out there. Reverse the word evil, folks, and you will have the word live. Let's go take a look at the life inside these markets out here. Right now, futures really flat. Dow futures off a couple points. ES Mini trading out at 1565. That's up a point right now. King dollar back about 10 ticks. The currency market relatively flat out here. Gold off another $4 right now. That's down about 0.25%. Silver's off 0.25% as well. That's only 6 pennies there. Light sweet crude down 48 cents, trading out at 96.71. Across the pond here, we've got the DAX trading out at 79.39. That's off 5 points. No big shakes there. The FTSE down 26 points, trading at 64.64. The big mover in the marketplace was the Nikkei. Last night, up 3%, up 358 points out there. Otherwise, over in China, Hong Kong, you had the Hang Seng. That was off 30 points, really less than one, about maybe 0.15%, and you had the Shanghai off 2 points. So a flat market out there. Our call number is 877-927-6648. We'd love to hear from you. Give me a call. We'll go take a look at, and if you're listening on the radio or your mobile device at tfnn.mobi, don't forget, you can take a look at this show streaming live to you on your mobile device. Just go to the homepage of tfnn.com. Over on the right-hand side, you'll see that button with those 3 smartphones. Click on that. This show will stream live to you, just as all the shows here at TFNN. And the archive of this show specifically is on Channel 9. Now, we're going to start off taking a look at the ES Mini, the 30-minute chart that we've got out here. And you can, if you're following along on TigerTV, you can see I've got some boxes there shaded in yellow. Now, if you are struggling to actually see what it is, my charts out here, and you'd like to see it in HD, in high definition, go to the homepage of TFNN.com and sign up for that Tiger's Den. Do it right now. You can test drive it for 30 days. You will see all the numbers. You'll see the charts out here. What we're taking a look at right now, we're taking a look at expansions and contractions. Good old Leonardo Fibonacci out here. And we're taking a look at if you take a look at this chart here, what does this chart actually say to you as you take a look at it? Or let me ask you this question here. I'll ask it a different way. Where are the expansions between swing points when you take a look at this chart? And where are the contractions? Taking a look at movement. Exactly. You got it pegged here. You've got expansions to the upside and contractions really to the downside out here. In fact, if you take a look at the markets coming into the time frame yesterday of 11:30, you had the ES Mini get up to a price point of 1568. What do we have out there? Well, you can see that it was moving into that overbought condition. Overbought condition just simply being defined by that EKG system of that relative strength, relative weakness indicator out there. And what also was taking place as the ES Mini was getting up to 1568, it was making 2 beautiful expansions of swing points. What's a swing point? That's pretty easy. It's where you see a significant change in trend in the marketplace. That first change in trend that you'd be looking at coming in at the price point at 10 o'clock in the morning, up at 1565 on April, the first April Fool's Day out there. The expansion is from that swing point high all the way down that's being measured, all the way to the swing point low that came in at 4 o'clock in the afternoon on April 1st as well. That level was 1552.50. If you took the difference between those two, 1552.50 minus 1565 out there, multiplied that times 1.272, added that to your 1552.50, that would take you up to the price point that came in yesterday at 11 o'clock in the morning, or very close to it. Remember, we're just rounding just slightly here, and that was 1568. So you had a 1.272 expansion of a swing point. You then had a 2.618. That's another Fibonacci number. Remember, you want to make sure that you've got in your arsenal, you want to make sure it's written down on a pad of paper or glued in your maybe on your monitor, or just simply in your mind. If you've got a great memory, you want to be paying attention to 0.382. 0.618, 0.786, 618, and 786 oftentimes are reversal areas. 0.382 just really helping you to measure the strength of a move out there. And then you've got 1.272, 1.618, and of course 2.618 out there from an expansion standpoint. And that's what we had yesterday coming in that same time frame at 11:30. You want to make sure that you are aware of these expansion and contractions. You may not have this tool on your software out there. This is Instant Windows here that I'm using. You may not have that tool that can automatically be turned on, but you can do the measurements of expansions and contractions. All software tools have Leonardo Fibonacci's tool out there. So use it. Use it to your advantage so that you can understand why stocks move. Now, why they actually move in these patterns, why they stop in those places, what I do know is when you've got multiple Fibonacci numbers, expansion/contractions coming together, you should know that that's going to be a strong area of support or resistance. Here, where you had the market moving up, the ES Mini, you had a 2.618 expansion of the swing point that took place at 6:30 in the morning. This is 6:30 in the morning yesterday. That swing point high, 1563.50. The swing point low that you would be benchmarking that off of came in at 10 o'clock in the morning. That came out at 1560.75. That created a 2.618 expansion out there. Price, what did it do? It stopped in its tracks and just simply moved back. And where did it move back to? It says 707 out here, really in between 618 and 786. So you'd see that it moved back to a logical area quite frankly, and then it went ahead and moved higher coming into the 5:30 time frame yesterday. As it did that, it was making a 0.786 retracement of that high that was put in at 11:30. What does the market do? It goes ahead and moves down into the time frame of 11 o'clock last night, getting down to 1563.75. What was that? That was a 0.382 retracement. But just look at the bottoms here, and what you will see is you will see nothing more than just normal retracements out here. Normal retracements right now coming into the time frame here after the ADP numbers were released. The ADP numbers disappointing just a bit out here. You had 158,000 private sector jobs, but really when you take a look, that certainly didn't create an expansion to the downside. Just a retracement of less than 50% so far coming off of that swing point that came in at 4 p.m. yesterday. What does all that mean? I tell you what it means, folks. It means that the S&P 500 wants to go tag that high out there. 877-927-6648. Give us a call, folks. We'll be
What
right
type
back.
of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's take a tool around. Let's go take a look at the daily charts of the futures contracts out here. We've got the continuous contract for the Dow up on my screen here. Now, what the Dow did yesterday broke out above an area of resistance. That resistance really being established here by this bearish engulfing candle that took place on March 21st and engulfed the prior session here. That really set your resistance level up as the top of that session on March 20th. That price point was 14,476. You got to close above that area here on March the 28th. Little doji candle out there on April Fool's Day on April 1st, and you simply had a move higher. Says that the Dow, broke through a level of resistance out there, and now where is it headed to? That's a good question. I think the Dow just simply continues to move up as it pulls the S&P higher out there, so that the S&P can at least test that 1576 level. So you got a little bit of a breakout here on the Dow. It's certainly up over resistance. No overhead resistance from a candle standpoint ahead in the Dow. So it's freewheeling out there. It can do as it chooses. On the other hand, let's go take a look at the NASDAQ futures, the NQ out here. We can see the NQ yesterday, even with a decent move higher, that also running into resistance. That was the resistance also established by a bearish engulfing candle that took place on March 12th. That engulfed the prior session, and really what it set up was a resistance area was the March 8th high. That high is $28.17. That's the red horizontal line going across my screen. What you can see here is even yesterday got up to a high of 28.23, but closed at 28.15.50 this morning as well. Now that's that 0.786 Gartley pattern that you are also taking a look at. So we do have some resistance that is being held. Now you get a close above the price point of 28.17, just like we saw inside the Dow, and that would be a breakout of a resistance area. What would that set up next? Well, that would probably set up coming back and actually moving all the way up into the September 21st level, right around 28.52 is that swing point from September 21st. That's the low of September 21st. The high is 28.71. So that's on your NASDAQ futures. Let's go take a look at the Russell 2000. Russell 2000, the weak link inside the chain at the moment. If you take a look at the Russell, that also set up a bearish engulfing candle here on March the 19th. That set up your resistance area really at the high of that session. That was 948.40, which you can see that red horizontal line going across the screen. Take a look at. So we know where the bears are camped out, most certainly, and we know where the bears are camped out and whether or not the bulls can trample over them. You trample over a area of resistance, especially one that's been tested several times, at least 3 times out there, and that, in fact, is the case because we saw a test inside the Russell 2000. You saw a test on March 20th. You saw a test on March 25th. You saw a test on March 27th, on March 28th out there. And then, of course, it just simply gave up price, gave us some reversal candles as well recently. So we know where the bears are camping out inside the Russell 2000 futures. And they've decided not only just to camp out here, but they've decided to really pitch more than just one tent. You got this bear sash candle that took place here on April the 1st. And then yesterday what we saw a close just slightly below an area of support. That area of support was set up by this bearish engulfing candle here on February 20th out there. That high, 933.20. Yesterday's close was at 932.40. 932.40 versus 933.20 out there. Okay, sort of a break of a support level, but not, it's close. It's borderline out there. It does make you say, But if you were just wondering, why did the Russell stop where it did yesterday, all you needed to understand were previous areas of support and resistance, and really all really set up by understanding where is it that the bulls and the bears are hanging out. That's what you want to understand. In this case here, that was the bearish engulfing from February 28th. That was an area that should be resistance. When you get above resistance, it becomes what? It becomes support. Right now, you've got the Russell 2000 trading down at about 933.40, so it's at that first level of support as well. A break below that with some conviction, that sends the Russell all the way down to support level number 2. Support level number 2 would be set up right down here by this bullish engulfing evening star, or morning star pattern, I should say, coming in on February 26th. So 892.60, that is the next level of support if, in fact, this current area cracks. That takes us, we didn't take a look at the S&P futures. Of course, let's go take a look at the S&P. We were taking a look really there at the intraday chart. What we can see out here inside the ES Mini, it too is up over its most recent area of resistance out here, and that was set up by this little bearish engulfing candle from April 1st. You can see yesterday it closed above that. The ES Mini, it's and the S&P futures, it wants to go hit that swing point from October 11th. It's going to hit that swing point from October 11th. Whether it'll be today or not, we'll see. 877-927-6648. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow up 9 points. It actually was up 9.99 just a minute ago. I don't know if any of you are hockey players or hockey aficionados out there, but I was watching Gordie Howe. He was celebrating his 85th birthday on Sunday. I can't remember if it was Sunday or Saturday. I think it was Sunday out there at the while the Red Wings were getting their butts kicked, but he was out there celebrating, signing his book out there. I remember buying Gordie Howe's first book out there. And anyway, so you got the Dow was up 9 points. And anyway, let's take a look here. You got the composite up 5. Small caps are up $1.40. S&P not really out of the gate, up 71 cents right now. Google back $1.68. Apple up $4, trading out at $433.94. Microsoft up 1 tick. Intel up 3. Cisco down 3 ticks. Leading the charge, the upside, you've got Cons Inc. up 12% this morning. That's up $4.22. Apple just behind them, up $4. Unipixel, UNXL, up $3. That's up 13% this morning. Obagi Medical having another good day, up 10%, up $2.23. F5 Networks up $2 and change. To the downside, Global Payments, GPN is a ticker symbol. They're off about 6%. Tesla Motors coming out with a lease deal out here. Was up in the pre-market, now down 5%. Maybe some of the details of that leasing program that they've got there maybe not making a lot of sense. Off $2 right now. Cheniere Energy, LNG, that's off 99 cents. Joy Global down $1.27. Holly Frontier off $1. Chicago Bridge, CBI off $1 as well. You know that the Tesoro is down $1. That whole energy market is certainly under fire now. Looked pretty good out there, but the summation index has been ticking down inside the energy market here for quite some time. And I am paging one of our Tigers out here. Deke, if you are listening, could you give the office at TFNN a call? They are looking for your phone number, wanted to get in touch with you to review something that's a positive thing. So I'm just going to simply use our airways. Deke, if you are listening, just give the office a call. That would be great. So let's go back, take a look at these markets here. I've got the S&P 500 on my chart here right now on the screen, and you can see that 1576.09 level just screaming that it wants to get hit. It looked like yesterday was the day. Got up to a price point of 1573.66. Of course, I said, are you serious? You mean you couldn't get all the way up there and at least give us that test? Is that important? Yeah. Look, it is important to test your trading inside the swing point from October 11th, 2007. It is important while you're traveling price-wise inside there to at least test it and at least test the highs. Do it on whether you're going to do it with volume, lighter volume, whatever you're going to do. Test that, get over it, whatever you're going to, for technical traders, it's very important because while you are inside a swing point and you haven't done anything, it says that you want to go test the highs. That's 1576.09. Maybe today is a day right now, trade out at 1570 and 2 pennies out here. I don't know why it wouldn't want to do it on a wonderful Wednesday. But we'll see. We'll see what the markets often don't do what it is that you're asking them to do. They're going to do what they do. Let's go take a peek in here at the currency markets. Let's start off taking a look at the euro-U.S. dollar currency pair. Now, the euro-U.S. dollar currency pair, we showed the A to B equals CD pattern that it had formed here. That's coming off of the swing point low back at 10:30 in the morning on March the 27th. That price level, 127.50. That was the A point. Your B point was 12 noon on March 28th as it came up to 128.43. Then to come all the way back here, makes a retracement at 10 o'clock in the evening on March 31st down at 127.70. That was your C point. A to B equals CD, takes you up to 128.63. Got up, actually completed that, but as it was completed, that came with some wide ranging bars, moved just a bit higher, a tad higher coming into the midnight time frame on April 2nd. That get up to a price point of 128.669. Now, that was an A to B equals CD. If you just go and you take the retracement level of the swing point low, that takes you back to 10:30 in the morning on March 27th, all the way up to the swing point high. That came in a little dark cloud cover candle coming in at midnight on April 2nd. That 0.618 retracement, 127.98. And in fact, that's what the ES mini, or not the ES mini, the Euro US dollar on the 30-minute chart, that's what we're looking at, is the 30-minute chart. And at 9:30 last night, it completed that pattern out there. But you can see that price here, and this is important. This is really important. Really important, because even though it came down to that 0.618 level, if you're watching us on Tiger TV, I'll make this a black line going across the screen here. That body is so important. That is truly the essence of price out there. And the top of that body, where the price opened up at coming into that 9:30, that's a 30-minute chart session, was at a price point of 128.06. And what you can see, all these other small bodies here never got outside of this body as it was making that 0.618 retracement. Why is that important? Because there's no conviction that it's going to go ahead and turn right there. And in fact, what happened was the Euro US dollar currency pair went ahead and made a little bit lower low, and voila. What did it do? It actually made a 1.618 expansion of a set of swing points out there. Then stepped in the bulls, the bullish and not a bullish engulfing, but a piercing candle that came in here at 3 o'clock this morning, and that is on the Euro US dollar currency pair. Now, I'm just going to go ahead and erase these patterns off of my chart here because we can always redraw them. So now the question is, well, where's the euro bouncing to? Well, you got an A to B equals CD, probably setting up a Gartley sell pattern. If we take a look at the retracement now coming off of the swing point high from midnight on April 2nd all the way down to the low that came in here at 2:30 in the morning, you can see it's already through the 0.618 retracement level. Let's take a look at the A to B equals CD pattern. Let's come off of the low. Let's take a look at the B point, which was established at 5:30 this morning. Little retracement down into the 7:30 a.m. time frame. You'll see a 1-to-1 A to B equals CD on the euro is 128.57. That is where it's headed to. You've got an A to B equals CD. You've got a 0.786 retracement there. That would be setting up a Gartley sell pattern. Now, what you're going to do is I'm going to step back a bit here. I'm going to actually get rid of that so we know what we have set up here. But the bar that's coming in there right now, if that bar were to keep moving up into that area, I'd say that's a wide-ranging bar coming into that 0.786 level, and you would not go ahead and put on the sell trade there. What you can also see here is what we can see is that each time that on the 30-minute chart on the EKG, using that relative strength, relative weakness indicator, you had the market move down where into the oversold territory where you saw a little bit of a bounce out here. But look at the difference between this candle that came in at 9:30 and price never got outside of that body versus the candle that came in right here at 2:30. You got conviction as soon as it moved on out of there at 4:30 this morning. That's how you want to be able to trade. You want to use these candles as your friends. There is no better friend when you are taking a look at the marketplace because you get to sit back as the general and take a look at the battles that are going on and understand where the best places to put your on. That's on the euro US dollar currency pair. Let's go peek in on that Great British pound. Let's go see what she is doing out here. Let's go take a look at the weekly chart, the daily chart first. This is the 60-minute chart that we've got up on the screen, but let's go take a look at that daily chart. And after one day of moving down, creating a big bearish engulfing candle, as it got into that resistance level, looks like it's got some more warriors, more bulls here, and they're going to go try and take on that position. That position coming into that strong resistance area now used to be strong support. Now it is strong resistance. So we'll see if it can bust through that. I suspect that it's going to. You know, what we can see that it's really doing now is just simply consolidating sideways. It's been consolidating sideways ever since it really had that big move here, that nice candle formation on March the 14th. Of course, the nicer candle formations were the hammer candle and that bullish engulfing on March the 12th and March the 13th out there. So it looks like me like the Great British Pound. It wants to go take on that area. It may take a little while, may just simply consolidate sideways, but right now the lower portion of that consolidation range, really about the 150, 1507 area, that is on the Great British Pound. Let's go take a look at that yen out there, the Japanese yen, U.S. dollar, Japanese yen currency pair. Let's see, we've got a 60-minute chart out here. Let's take a look at the pattern. Now, we did see that point 618 Gertley buy pattern that had set up. I passed on the entry on that trade just simply because there were no bulls in place here as that price point was being hit. And, it looks to me like really what this wants to do is still move down in that 0.786 level, 92.09. That is my target for the next pattern here on the U.S. dollar, Japanese yen. That's looking at the 60-minute chart. Let's take a look at King dollar here. What is the King doing? This is the weekly chart, so let's go take a look at the daily chart of the U.S. dollar index, see what we've got here. The U.S. dollar index really just simply moving sideways, no real back off here. The real key line on the U.S. dollar index, it's easier just to look at it on the weekly chart. So let's actually just do that. Let's go back. We'll flip back to the weekly chart. And that's the descending trend line coming off of that high from June 11th, 2010. Your next touch point on the U.S. dollar index is July 27, 2012. I have no idea on the UUP if you could really do the same. I suspect not because of fees and so forth. But, the U.S. dollar index, you can usually get a delayed data feed on that without too much of a cost if you are trading off of the U.S. dollar index. But right now, so far this week, that level has held. Yes, there's a beautiful 0.786 Gartley sell pattern, but breaking that trend line to me says, something to not something just to think about, but something to watch. Let's go take a look at Goldilocks. Let's go see what gold is doing out here. Now, gold here traveling in this descending price channel out here, this descending price channel starting back up at the highs here in October 5th, 2012. That's the blue diagonal lines that you see. What gold did do yesterday, unfortunately, it broke a little rising trend out here that was coming off of the lows from February 21st. So we can see that level broken. Gold has some nice support, as you do know, coming all the way back into the lows that were established back in September of 2011. That's at that 1535 level. 1535 has been tested a few times out here. It was first tested in December of 2011. It was tested back in the May of 2012 time frame. Tested twice in May of 3 times in 2012. And it looks like maybe what we're going to see here is another test. Of course, if the candle were to close like that today, you would say, the bulls have shown up because you got a little hammer candle. But we got a lot of time left in today's trading session, so I don't suspect that's what we will see out here. Gold, a nice buy. Take a look at the consolidation range that we've had going on in gold here. This is taking you back into 2011. It's been consolidated in a nice 265-point range out here. That is a beautiful thing. So keep your eyes out for that 1535 level inside. Gold may be setting up a nice buy out there. Let's go take a look at high-ho silver. As we take a look at silver right now, trading out at $27.24. You're going to see also a descending price channel that silver has been traveling in. We can see that level is was stopped yesterday right at that area as it got down to a low of $27.15. That level was pierced here this morning. We'll see what kind of candle forms here. We can see in silver, if you take a look at that relative strength indicator, it is truly in overbought territory out there. Oversold territory. That's in silver. That does not mean that it can't go lower. Silver has about a $9.30 trading range. That's coming off of the same low, that hammer candle. This is the beauty of hammer candles. That's the low from September 26th out there. That price point is $26.15. And the consolidation top really right about the highs. You can use the high from the candle of October 1st out there, right around $35.45. That seems to be, or 44 cents, seems to be the resistance range. So got a nice trading range inside silver as well. Let's go take a look at natural gas out here. We haven't looked at natural gas here for a while. Natural gas setting up a nice 1.272 Gartley sell pattern. Now, sets up a Gartley sell pattern, completes that on March the 28th, gives you that little bearish candle reversal signal on the 28th. Skip this second candle here. That was the 29th. The market was closed. I don't know why. Sometimes my software picks that stuff up, but we'll just delete that bar. There we go. And still some continued movement lower. Now, what is light sweet crude? What is natural gas likely to do here? Certainly, it wants to at least come back and test the bottom of this rising price channel. It's tried to bust it out twice. Both of those have been false breaks. If it can break through that rising price channel if it can break through that rising price channel for a third time, what we'll see, let's go take a look at the retracements. The 0.382 level is $3.71. $3.45 is the 0.618 level. So if that rising price channel does get broken, you're looking at about $3.45. Let's go take a look at light sweet crude here. Let's look at the continuous contract for light sweet crude. Backing off really just slightly, I say here. We're trading out right now at $95.64. This had made a Gartley buy pattern, made a 0.618 Gartley buy pattern. You got that bullish engulfing candle on March the 5th and made a nice move up. No real bearish candles of significance out here. In fact, it's trading below the open session from March 28th. That open was $96.68, but only by a few pennies here right now, and the trading session is not over. So I'm not yet convinced that light sweet crude actually wants to back off. Bonds here trading out right now 144.27. This could really be the trade because you get a close above 144.29 and you will have a breakout. 877-927-6648.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 19 points right now, trading out at 14,643. S&P's down about 4 points, trading at 1566. I've got the ES Mini 30-minute chart on my screen here. We're going to see the test, see if the bulls are still hanging out at this 1560 level. Why do I say are they still hanging out here? Well, two reasons. All we have to do is just take a look at the previous two candles out here. You had the bulls that came in with a nice bull sash candle right here at 10 o'clock in the morning on April the 2nd. That price low is 1560.75. You're trading right now at 1560.75. More importantly, yesterday at the coming into the close here, the level of 1559.50, you had a nice little bullish engulfing candle. We can see price here moving down into that oversold level of that relative strength. So we're going to see here's where the battle is going on right now between the bulls and the bears. We also have a 0.618 retracement as we're coming into this area. That's a 0.618 retracement coming off of the swing point at 3 in the morning on April the 2nd out there. So it's very clear where the bulls should be able to take back control here in this session. So we'll see if that happens, but that's what you should be looking at on your chart. Now, that's the 30-minute chart that we're taking a look at. I can flip over into the 10-minute time frame here and see what we've got. Now, on the 10-minute time frame, you can also see the area where the bulls were hanging out. On the 10-minute chart, you'd be looking at this little bullish engulfing candle that came in right here at the time frame of 4 o'clock yesterday. So you can see that's the level, not a hammer candle that took place the session prior to it. So we'll see if this area will hold. You can see on the 10-minute chart, obviously, you start digging down into more of the ultra tighter time frames out there. You're going to more easily get into the oversold, overbought territories utilizing that relative strength indicator. So we'll see. Right about now, coming into the 10 o'clock time frame is where we ought to see the bulls try and take charge out here. Now, the importance in coming back and take a look at the ES Mini is if they fail to hold here, you can get down to that 0.786 level. But so far, we haven't seen any expansions yet to the downside. We start to see expansions to the downside, and then you really start to see a change in trend that is taking place, just simply by paying attention here to the 30-minute chart. Because on this 30-minute chart here, all the pushes down on any major swing points have all held. They've all really been just simply retracements out here. Let's go take a look at Panera Bread. Panera Bread, they put some bread in the oven. They're cooking it for you. They're charging more for it this morning. PNRA is the ticker symbol. They are the leader in the clubhouse. Let me just, that didn't work real well. PNRA. That is up $6.40. So let's go see what Panera Bread is doing. It's trying to take out its swing point high out here. So it's traveling into the swing point high from October the 4th. That had 336,000 shares. Really, it gapped down the prior session. So here is the resistance area inside Panera Bread. That's from the gap down. It was tested, looks like 2 other times. Question is today going to be a third test of that level? That level being the gap down here from October the 5th. Broke down with 731,000 shares. The first test to try to get back above it was on the 17th of October, only 298,000 shares. not enough to bust it up. The second time was right here with 1 million shares, still not enough to bust it up, and that was on October 24th. It's got good volume in it today. We'll see if it can bust through that resistance level, and that's done 241,000 shares in only 28 minutes of trading. So it is trying to break above a resistance area. Folks, if you're off to start your day, I want you to have just simply a wonderful Wednesday, and most of all, I want you to remember this, and that's this. You have an amazing power within yourself, and that power is so strong, it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great day, or we'll see you in a few. Take care, folks.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.